Good morning, Armor Insiders. Good morning, everybody who is an Armor Report subscriber. Good morning, everybody. How you guys doing? This is Fed Day. We're going to talk about Fed Day protocol and how we manage our positions at this virtual hedge fund we call the Armor Investing Way. So I appreciate you guys spending time with me this morning. Before I dive in, don't forget, whatever I say, whatever you hear anywhere else on any platform, you got to figure out your own risk tolerance, your own goals, your own strategy. You got to execute that. You have to be the smart one. Okay. So this is a guide of how I run my own personal capital and how I run capital for investors, something I've been doing for over 35 years. All right. So what we do here is we divide our virtual hedge fund. And I call it that because Armor Insiders on the live trading desk with me all day, sharing information in our Slack room from all over the world. So we have portfolio managers on our desk from Israel, Hong Kong, Ecuador, Canada, England, Poland, the US, Argentina. I love all you guys. We're pooling information and we're making us better as a collective. So if you have an interest in that, you want to join us, go ahead and take a look. armrInvesting.com. See what we're all about. We've also started a Substack. Substack's free. Armor Investing on Substack, the Armor Report. We're sharing with you research reports from this desk, along with a week in review. Every Sunday, you're going to get that in your email box, showing you what we did the week before and what we're thinking of doing going forward, helping you get ready for your trading session. As always, we do these Wednesday morning meetings for all of you. And if you want to be part of these morning meetings every morning, you can join the Armor Report. All right. So having said all those things, let's dive into what Fed Day protocol is. First of all, the risk monitor here went green last week. The risk monitor drives all of our risk decision. We use Armor Algos for the top 10 indexes that we've identified. And when we see a confluence of behavior in all 10 using our proprietary algos, it tells us institutional flow of capital. That's basically what we're doing. It's kind of simple. Institutions make markets. They don't trade as fast as you and I do. They're building positions over time. They're running billions of dollars. So they can't say, hey, I like Cameco. I'm going to go buy all my CCJ today. They can't do that. They say, I like Cameco. I'm going to put capital to work, and it's going to take them weeks to put all the capital to work. Or they say, hey, I like the market here. I want to put capital in the market. They execute over a series of weeks, maybe even months, depending on how big they are. Okay? So the key is to understand where that flow of capital is. 8 out of 10 stocks follow the market. So that's why we start with our risk monitor. It went green last week. The first 5 days of a green signal is the most dangerous. In other words, when the green signal fails, it happens in the first 5 days. If we get past the first 5 days, the probabilities that the market will go higher in the coming weeks ratchets up dramatically. Okay. Today's day 4, and it happens to be Fed Day. So the rubber's about to meet the road. This is for all the marbles. You know, when I say this is for all the marbles, if I were to say that to my kids, I don't think they really understand what that even means. It's kind of disturbing to me. It's not so much disturbing because I'm getting older. It's disturbing because kids today are playing games, doing things online, and they've kind of gotten away from the beauty of using their own imagination and doing something as simple as playing marbles. Pinball. Pinball is a phenomenal way to get kids off the screen. Got one right out there, Jaws limited edition. The kids love it. So there is hope for my kids yet. There's no influencer on YouTube talking about that. You know what I mean? But I digress. Let's get to managing capital. What is Fed Day protocol for me? I don't trade in the morning. I will not do anything to my portfolio until after 2 o'clock when the news hits the tape. I won't have the live trading desk going. I'm going to get off the desk. I'm going to spend the morning with my wife. We're going to go walk the beach. I don't care what's going on this morning. It's all meaningless. It's all noise. There's no stop that's going to be hit during the day that I would execute. There's no new position I want to put on. This is a clear the decks day. Fed day protocol. News hits the tape at 2 o'clock. Normally, I don't start trading until 2:30. So ARMR insiders will get the live stream going at 1:30. So we can all go over what our process is and then be ready for the 2 o'clock news drop. Usually I don't start trading until 2:30 when the Fed starts speaking, right? When Powell starts talking. But of the recent Fed meetings, got to be honest with you, we've had some 2:15 trades that have been money. So it's not that I won't trade earlier than when he starts talking, but normally I wait for his first few comments, get that out of the way. Usually he says something that the street doesn't like. You get a couple of down bars, and then that sets up the entry point for the rip to the close. Okay, the market's priced to perfection right now. Everybody expects 25 basis point cut. So what's really important is what happens next. Does he talk about more rate cuts this year? Does he put it out till next year? Does he go back to his mumbling ways about, well, look at the data and blah, 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 blah. Okay. So we have to read and react. I don't know what he's going to say. We don't know what the reaction is to the news. So we literally just sit here and we wait. We see the news hit the tape. We see him start talking. We look for trading entry points. And at the end of the day, we execute stops. 330, 345. Let's say what he says, for whatever reasons, disappoints the street. Market's getting wrecked. I'll raise cash. Stops will be hit by the end of the day. I'll start raising some cash. Okay. Some talk, some chatter I'm hearing out there about hedging in front of this, or precious metals might be peaking. A couple things I want to say about that. One, there's absolutely nothing technically or fundamentally that would suggest precious metals are peaking right now. Nothing. They're on an unbelievable tear, and they had a down day yesterday. That would be totally normal. So if you feel that metals are peaking, that's a pure gut feeling. And hey, man, if you're good at trading your gut, go for it. I don't do that, but go for it. I said a couple days ago, I said it, I think yesterday morning, and I'll say it again. These assets are in a wicked uptrend. I would be looking to add exposure if necessary. I mean, we're fully loaded on metals, so I don't need them. But I'm just saying a pullback to the 14-day, really the 25-day moving average, that would be ideal on GDX type assets. A pullback to that level and a follow-on buy trigger, that's the place to add to it. So the first sell-off after a ripping uptrend, the first sell-off, that's like normal. That's like a normal move back to unbelievable uptrend. Before I would call a top in the metals, you would need to see probably a sell-off, a rally back to test, maybe a double top, maybe some other formation. It's going to take weeks for that. But I would say anybody who wants to hedge into the Fed meeting, have at it. I get it. There's nothing wrong with that. And you've got to figure out what your strategy is. You don't have to wait for me to hedge or whatever. What's your strategy? What's your risk tolerance? What's the goal of the portfolio you're running? And then go execute that. You be the smart money. That's the beauty of the virtual hedge fund. If this was a real hedge fund, each of you would be a portfolio manager, right? CIO, if you don't mind, that would be me. And we would have out tranches of capital, and we'd each run it differently, and that would create the performance. That's what a hedge fund is. So I would never dissuade somebody or debate with somebody if they say, I want to hedge this or do that. absolutely go for it. There's many different ways to skin this cat. Okay. So that's the Fed Day protocol. I won't be here once this meeting's over. I'm out of here. I'll see you at 1:30. Let's go over now changes to the portfolio that we had yesterday. So these are actual moves in the portfolio yesterday. So Cameco, CCJ. And by the way, guys, we just dropped yesterday the fundamental reasoning behind our CCJ exposure. It started back actually a long time. We've been following CCJ for a few years. But most recently, the most recent entry point started here in this first green box, which is April 24th of 2025, right here. When the risk monitor originally went green, that was the entry point using an ARMR algo. ARMR analyst Erez was out there pounding the table on it. Stock ripped higher, okay? Then we had the first consolidation. The reason I'm really showing you this is that we're at this stage in the bull market cycle where the first test of the 50-day moving average is my favorite entry point for a follow-on buy trigger. You're not going to find a lot of ideas at this stage in the cycle that look like Cameco, in April, which was a much longer downtrend, which was at or below or right near the 50 and 200 day. We've had a ripping bull market. So if you're looking to put new capital to work, the next level entry point, the stage that we're at in the bull cycle is this right here. It rips, it consolidates for a month or two on the 50-day moving average, and then breaks out again. So we're on Cameco. 2 days ago, we bought it, early in the morning using day trading tools, and we held it overnight because it ripped higher on that news of U.S. Building out its strategic holdings of uranium. Okay. Then yesterday, you see the sell-off. So what I said to you yesterday morning is I have a kind of like a minor size on CCJ on that rip, and I'm going to wait to buy it on weakness. So I got the weakness yesterday, a little bit weaker than I wanted, but I got the weakness. So I added to my position there. I always love to add to a position on weakness closest to the stop. If it takes out the low of the big up day, I'm gone. That's the stop. That would be a reversal pattern. A breakout and reverse, that's a no-brainer. I'm gone, okay? If it holds here, then I had a chance yesterday, we had a chance yesterday to increase size on weakness. And then we'll see what it does from here. If it breaks out, then we have our maximum size on CCJ now. It's going to be great. Yesterday, we added to our coal position. We already have BTU down in here. And we have added last week's CNR right in the base. And so yesterday we added Warrior metallurgical coal. And you can see the ARMR algo entry points are here, and this is entry point number 3. So we have 3 coal companies in the portfolio now. And they're actually... They're one. I said you can't find a lot of ideas that look like the market in April, but the coal stocks look like that. So money is shifting into coal right now. Totally underappreciated asset. So added that to the portfolio yesterday. Now let's go over 2 highlighted stocks of the day that we may add. So you could say Warrior and CCJ are stocks to buy, and you would say these 2 stocks are stocks to watch that are at the top of our whiteboard. The first I want to say is interactive brokers. Okay? Interactive brokers. First of all, the financial stocks are going through the roof, and I don't own enough of them. Now, I do own small cap index, and a lot of them are in that index. But JP Morgan, Goldman Sachs, Morgan Stanley, Robinhood, these things are going through the roof. SoFi. Okay? So I've owned SoFi before. I've traded it. So I've owned interactive brokers before. I've traded it. Here's the next entry point. And notice that the chart's the same type of entry point as CCJ. So we originally got on interactive brokers down here in April, and we've traded it a couple times, sold it out in that yellow box right here. went higher, and now it's kind of consolidated right on top of where we sold it. So I'm looking for the next entry point. It's building a base over a month long, right on top of the 50-day moving average. If it closes in that green box somewhere around 65, let's say, and the ARMR algo gives us a buy trigger, that'll be our next entry point into Interactive Brokers. So it's at the top of my list. Hey, here's an extra bonus. We already own Coinbase. That's another name in that list. Coinbase, Hood, SoFi, Interactive Brokers. They all seem to run together. We own it right here in the base. Starting to make a little bit of money on it, but I'm looking for this thing to really reignite. Okay, that's a bonus stock. But stocks to buy, stocks to watch, IBKR. And then we're doing some research today on VRT, Vertiv Holdings. Now look, if you go to our Substack, the ARMR Report Substack, you can go check it out. It should be in this list here in this video. You should see a link to it. Now I could post it again later, but just go to Substack, you'll find us. What we drop at Substack, it's free. We're sharing with you fundamental research of why stocks are on our whiteboard. We use technical analysis and algorithms to execute. So it doesn't mean we're buying them right now. It means these are on our whiteboard, some of which we own right now, some of which we're doing research on. We're doing research right now on VRT. Okay, it's got the same setup that I'm talking about when it comes to this stage in the bull cycle. The breakout was actually in May, somewhere around May, runs up, pulls back, holds the 50-day moving average, and gaps back above it. That's the area where it gets me real interested. Takes out the highs of this little consolidation here, and I'm probably going to be long. We're doing research on it now. You might see us drop that in our Substack. Go subscribe. It's free. In fact, this week, as I already mentioned, we uploaded our reasoning for why we focus on CCJ. We call that the gorilla in the uranium space. Okay. So Interactive Brokers, VRT, or stocks to watch, CCJ, HCC, stocks to buy. We've already owned them. Fed Day Protocol. I am now off the desk. ARMR Report subscribers, ARMR Insiders. 1:30, we'll get the live stream going. 2 o'clock, we'll start trading. I hope everyone has a wonderful trading day. If you have any questions, want to ask me, throw it into the comment section. I'm happy to answer it right now if you want. If you watch this later, I'll check this during the day and I'll answer it in the comment section of this video. At the end of the day, guys, remember, no matter what you hear from me, this is my personal approach, my professional approach. This is how I run money. You got to figure out how you want to run money. Risk tolerance goals and all that. Think for yourself and be the smart money.